The valuation of many banks is very low, while the U.S. economy looks poised for a soft landing. With the banking mini-crisis over, investors should look for high-quality and cheap financial stocks to buy. JP Morgan. JP Morgan reported superb first-quarter results. Western Alliance. Western Alliance's first-quarter results showed that it's a safe, highly profitable regional bank. American Express. American Express's CEO and multiple street banks have expressed strong confidence in the card network's business. Let's dive in. Here are the 3 top financial stocks to invest in for long-term growth. Welcome to Timely Investment Research. The nation's largest banks reported strong first-quarter results ahead of analyst estimates. As Barron's put it, big banks seem to be sailing through. Meanwhile, the publication quoted Wells Fargo analyst Mike Mayo as saying that there is no evidence of a banking crisis. CNBC's Steve Leisman tweeted on April 11th that loans are still 18% above the pre-pandemic level, and Robin Brooks, a former Goldman Sachs senior economist, tweeted that large banks' deposit outflows are normal, while small bank deposit outflows have ended. All of that information, plus the extremely low valuation of many banks and the strong overall U.S. economy, makes this a great time to buy many financial stocks, including many bank stocks. When it comes to investing in financial stocks, I'm most bullish on the strongest large banks, well-run regional banks that will benefit from the onshoring trend, and credit card networks that will get a boost from the strong labor market. Number 1. JP Morgan Chase. JP Morgan's profit soared 52% year-over-year to $12.6 billion last quarter. Its net interest income jumped 49% year-over-year to $20.9 billion, and its top line increased 25% year-over-year to $38.3 billion, representing its highest quarterly sales total ever. Moreover, the bank raised its full-year net interest income guidance to $81 billion from $74 billion. Also noteworthy is that despite all the hand-wringing about consumers' financial difficulties, the bank's 30-day delinquency rate was unchanged in March, staying at a low 0.88%. CEO Jamie Dimon said the U.S. economy continues to be on generally healthy footings, consumers are still spending and have strong balance sheets, and businesses are in good shape. With JP Morgan's core businesses all performing very well, it is one of the best financial stocks to invest in now. Additionally, in a note to investors on April 17th, Bank of America increased its price target on JP Morgan stock to $158 from $152, citing what it sees as the bank's strong execution at the top. Given JP Morgan's strong growth and impressive outlook, its forward price-to-earnings ratio of 10.85x is rather low. Number 2. Western Alliance. Despite all of the worries over regional banks, Western Alliance reported very strong first-quarter results on April 18th. The bank's earnings per share, excluding certain items, rose slightly to $2.30 from $2.22, while its adjusted revenue climbed to $712 million. The value of the loans that the company intends to hold for the long term soared 13% year-over-year to $5.3 billion. Although Western Alliance's deposits did drop 9% year-over-year, the bank reported that its deposits quickly stabilized. The bank is taking multiple steps to grow its insured deposits going forward. In the wake of the results, investment bank Wedbush upgraded the shares to outperform from neutral and placed Western Alliance on its best ideas list. Wedbush wrote that Western Alliance's higher level of insured deposits at 73% should help support its deposit levels going forward. I remain convinced that over the longer term, Phoenix-based Western Alliance will benefit from the many factories being built in Arizona. Western Alliance is trading at a tiny forward price-to-earnings ratio of 4.3x. Number 3. American Express. Encouragingly, American Express reported that its U.S. consumer credit card delinquencies were unchanged last month at a relatively low 1.1%, while its U.S. small business card member delinquency rate also stayed at 1.1%. Although American Express first-quarter earnings per share came in below analyst estimates, its top line jumped 22%. Moreover, the company's bottom line was negatively impacted by American Express's decision to greatly increase its credit loss provisions in case of a recession. Excluding the surge in those provisions, its net income climbed nearly 50% year-over-year. Further, investment bank Bernstein named American Express stock as one of its top 12 overall stock picks on March 29th. And on April 4th, investment bank Oppenheimer identified American Express as its best pick in the credit card space, as the bank expects American Express's sales to climb nearly 14% this year. Oppenheimer trimmed its price target on American Express to $180 from $182, but kept an outperform rating on the shares. Also making me very bullish on American Express stock is the fact that Barron's quoted its CEO as saying at the outset of the banking mini-crisis that it's sort of firing on all cylinders right now, while 2022 was the best year in the company's history. Worth noting, too, is that as of the end of last year, Warren Buffett's Berkshire Hathaway owned 20% of American Express stock. That's a big vote of confidence from the Oracle. American Express stock is changing hands at a forward price-to-earnings ratio of 14.5x versus 30x for MasterCard and 27x for Visa. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.